Real quick, just wanted to cover, I see a range of traders asking, what in the heck is going on in the markets? All over the place. Instagram, YouTube, even guys living in high-rise buildings in Dubai saying they had the worst month ever in April and it's going on and on. They don't know what's going on. Well, you're seeing massive institutional investment bank side buy program activity agenda drives. So we had the massive rally on Friday. So we had that huge rally Friday. So ran all day long. And now we're sitting up here holding this area. And that looks exactly to me like institutional distribution. So what they do, they come in on pullbacks and they run buy program activity in stocks, options, futures, whatever markets are available to them at the time to hold the market up. So they're long from lower levels. They pump this market up for what, 17, 18, 19 trade days. I'd have to go back and count, like since the end of March. And then they have one last little extension, and then they have this area that looks like this, kind of getting a little bit of a megaphone pattern with a very definitive pivot. So if that breaks, could trigger any late buyers from that have the ability to be instantly reactive and get out of those positions. You have the market oscillating in this range. So a lot of times what's happening is as the market is getting pushed up, remember they're holding positions from lower levels, they're taking a little off. They push it up, they push it up, they push, they take a little off. They push it up, they take a little off. They push it up, they take a little off. They push it up. So they're distributing, meaning now this is stock holdings and options positions and futures. What they're also doing up in here is they're starting to put on a short futures hedge position so they can protect their stock position as the market starts pulling back out of this area. And they're putting on options plays, puts. So this looks like a classic managed area of distribution taking place. So they'll eke out a little high, little high, little high. And if we don't really break out and run today, tomorrow's CPI, and it might be that their thought is CPI is going to be a little rough tomorrow, so they better take all these stocks and positions that are way, way, way deep in the money and do some distribution, ring the till a bit, take some profits. Now myself today, right out of the open, we had a long signal. And I was kind of surprised we made all the way up to a new high. Thought we'd at least maybe come up to the upper area, maybe stall out. And then from that point on, I've only worked short signals. I had 1 and 2, that's it. So I'm sitting on my hands, basically done for the day. The way this was grabbed right here, as we're ready to come down and blow that area out and probably accelerate to the downside, heavy, I call it like triad institutional buy program activity. They're buying stocks, options, and futures all in unison and drive it all the way back up, steamrolling anybody trying to sell to get a new high in. So, pump and hold, pump and hold. Now, the only ones that can do that is investment bank side, because the thought is that they're still back again playing with Fed discount window money, which means they have monopoly money to run buy program activity. You and I don't get that, but they do. So this looks like to me a drawn out distribution event. They may be worried about the CPI number tomorrow, so they're going to manage today with no real econ news going on. And then how we close today will be really important. I would say if we close in the lower side of this range, Asian session and EU markets might come in and ring the till on their stuff that's deep in the money and drive this lower. To dissuade that activity, they literally might have to park this thing way the heck up here or even higher to try to dissuade selling going on an Asian session or EU session from ringing the till and exiting out the door first. So they can come in and pump futures at night too, but we'll see. We'll see what happens. I would say a close today anywhere in the lower third of this leaves that open for some sort of probe below that in the overnight session. Now, if anything geopolitical happens, everybody is so freaking long, and everybody's going to have to, and not only are they're long way above value. They're buying wondrous amounts of buying way above the VWAP each day, massively inefficient levels of buying. So now who buys way above the VWAP? Small percentage of the buying in relation to all of it is retail, and a big part is investment bank side, because they're reactive. They can get in and out of those positions quick. So they'll run buy program activity to keep sucking in dumb money. Dumb money will come in there and keep thinking the market's going to break out when they're actually distributing into that. So they have to have a bag holder. They have to have somebody holding the bag when they get out. They have to distribute into somebody. It's not like hedge funds are going to be up here taking the other side of their positions. So they gotta keep luring in, hold it, get a higher high, keep everybody thinking we're going to go higher and higher and higher. They always do that ahead of a big structural move. And I'm not saying they're going to sell it off, but hey, we're seasonal May, sell in May and go away. At some point they're going to do a distribution event, whether it's planned or reacting to some economic news or geopolitical event, and then that's ugly for them, because then they have to get out of positions in slippage that's counterproductive to the cost basis of their position. If they're working it where they're holding it up with some instruments and baskets of automated activity while they're distributing out of stuff that's deep in the money, then they can neutralize the negative slippage. That's what they do. They're holding it up to reduce and mask their distribution. So that's just exactly what it looks like is going on to me, especially after that big linear move and the way we're getting a bit of a megaphone pattern in here. It's looking like massive distribution event with a lot of cycles. It means they have a lot of inventory from lower levels that they're trying to cash out of. So that's what it looks like. And even though this is hacking some traders to death, I did just fine. Had a long, had a short. I didn't want to be long anymore, not up here, not with what I'm seeing, and I was short. Now, if I would have gone long here, that would have been like way up on the day, but I only need so much a day, and then I'll call it good. So even in a hack fest, the PFS system tools with that newer style of math that can ignore cyclical junk price action better than any prior build tools that I made that are using the body of a adaptive step type moving average, but putting in different math. I think this is the fourth or fifth type of math I've found. It's working really good. I'm very pleased with it. So, and where's the big target? That prior pivot high. That would be one area. We might through CPI news or whatever, some geopolitical, come down there and bounce off of it. And if it doesn't, it's whooshka time. Kaboosh, whooshka, bombs away, dive. The klaxon of a submarine, whatever term you use for the market coming out of huge pump and then suddenly unwinding and covering back into prior range. So there you have it. PFS system tools working great on TradingView, where we can now connect Claude AI to the desktop version and we can use tools like Traders Post to take signals from any type of indicator that has outputs set up properly in the coding for the indicator in TradingView to power automation. So there you have it. Have a fantastic day, and let's see what happens today. And then let's see what the CPI number is. Might be a little bit higher, might end up printing a little bit higher than expected. So we'll see.